Hi guys, welcome to Talking Money with Nosy, personal finance made simple. In this video, I'm going to be talking about how I choose my investments, and I'm going to show you my November 2022 investments on the stock market. So firstly, before you start investing, you need a goal. Start with the end in mind, which is what it is that you want to achieve, and then work backwards. For example, my goal with investing is that I want my investments to do two things. Number one, I want my investments to increase in value as much as possible for the next 20 to 30 years. So basically, I want long-term capital growth or capital appreciation. Number two is after my investments have grown, I want to restructure my portfolio in such a way that I can use the income from my investments to pay for my expenses. I choose my investments based on this long-term goal and not based on the hottest or most popular investment or what everybody else is saying on social media. Having my goal of long-term capital growth in mind, I did research and found that equities, also known as shares, also known as stocks, have historically outperformed other types of assets over long periods of time. I then did more research and discovered that the easiest, cheapest, and low-risk way to get stock market returns is to buy index funds like ETFs. If you don't know what index funds or ETFs are, please click the link on the top right-hand corner of your screen to watch a video where I explain indexes and ETFs in detail. But let me just briefly explain what an ETF is. An ETF is a basket of different shares that are sold on the stock market. For example, the S&P 500 ETF is a basket or a group of 500 large American companies. When you buy an ETF, your money is invested in all those companies that are in the basket. The reason why I like ETFs is because they are an easy way to invest in the stock market. You don't need to spend hours and hours doing research trying to find the perfect stock to add to your portfolio. A man called John Bogle, who was famous for inventing index funds, once said, "Don't try to find the needle in the haystack, just buy the entire haystack." What he means is when you buy an ETF like the S&P 500, you don't have to decide whether you should invest in Amazon or Tesla or Apple or Microsoft or Google, because the S&P 500 has Amazon, Tesla, Apple, Microsoft, Google, and 495 other companies in the basket. Today, one of the largest and most valuable companies in the world is Apple. 30 years ago, nobody knew that that was going to happen. But if you had bought the S&P 500 30 years ago, you would have benefited from the rise of Apple because it is part of that basket of shares. Also, in the next 30 years, we don't know which company is going to be the most valuable. But if you invest in ETFs, you'll benefit from the rise of the next big thing. Also, we don't know which country will be the next economic superpower in the world. America has been an economic superpower for a long time, but we don't know which country is next. That's why I don't only invest in South African ETFs or American ETFs. I also invest in global ETFs as well. How I choose my ETFs is very simple, and I've spoken about it before. The principle that I follow is, number one, I choose an ETF which represents my local stock market. So that's why I invest in the SATRIX 40, because it is made up of South Africa's 40 largest companies, which represent the South African stock market. Principle number two is I choose an ETF which represents the entire world. So that's why I invest in the core shares total world as well as the F&P Global 1200, although I should have just one, not both of those ETFs. I just haven't decided which one to let go of yet. I also invest in other ETFs as well, but the top 40 and my global ETFs are my foundation. Because ETFs make it so easy for me to invest without having to guess or work hard to find a good individual share, I allocate most of my money to ETFs. Last time I checked, my entire portfolio is made up of about 80% ETFs and only 20% of stocks or individual shares. This means that if the total value of my investments is 100,000 Rand, 80,000 of that will be ETFs and only 20,000 of that would be individual shares. This, of course, helps me to sleep better at night because if I make a mistake and choose the wrong shares, at least I have those ETFs to cover my shortfall. Next is how I choose my shares, which only make up 20% of my entire portfolio. When it comes to shares, there is a checklist that I go through before I even think about buying a single share. As a long-term investor, I want to invest in companies with proven track records. If you are a beginner, I recommend the following things. First, stick to businesses that you know and understand. Never invest in a business that you don't understand, because in the world there are thousands and thousands of shares to choose from, and it is going to be easier for you to do research on a company that you already know and understand. For example, think about a company like Apple. You may use Apple products yourself or have friends or relatives who use Apple products. So if you choose to buy Apple shares, you're more likely to enjoy doing research about the company because you at least understand something about it. Number two, you have to make sure that the economics of that company are solid. I prefer to buy good businesses that are financially healthy and invest in them for the long term. Over the long term, shares of good businesses with healthy financials, they go up. But if you buy shares of businesses that don't make any money or that struggle financially, your shares are not going to grow. I look at how well a company is doing financially based on 3 accounting statements: the balance sheet, the income statement, and the cash flow statement. By knowing some important things from these 3 statements, I get a good idea of how the company is doing financially. You can find these financial statements by going to the company's investor relations page and looking at their annual reports or their quarterly financial reports. So guys, each and every company that is on the stock market has got an investor relations page on their website. This applies to all companies, whether they are American companies or South African companies, Australian companies, etc. So if I want to see the financial reports of Apple, I just go and type on Google, Apple Inc. Investor Relations. You do this with any company that you're interested in. Then let's open that link. Okay, here we go. So here it says quarterly earnings reports. So you can look at quarterly earnings reports or you can look at the annual reports. So the quarterly earnings reports are called 10Qs and the annual earnings reports are called 10Ks. So if you want to see how the company did financially in the year of 2019, you download this 10K. If you want to see for 2020, you download this 10K. If you want to see for 2021, you download this 10K. So now, Apple's financial year end is September. So if they're reporting in September, they're also going to report for the previous quarters, and consolidated it becomes a 10K. So that's why for Q4 2022, which is for September, it's a 10K because that's their financial year end. So if you want to see how Apple did for this year, you download the 10K. So it tells you that this is an annual report. And what we want to do is actually see the financials. Let me make this bigger. So here we go. It says financial statements and supplementary data. This is what we want to look at. So this report is quite big, right? So you can go through it, go the business, risk factors, etc. I just want to take you through the financials quickly. So the first thing that you see here, this would be the income statement. So the income statement shows you the sales of the business, cost of sales, net income, earnings per share, etc. So that's the first statement, which is the income statement. Next, you get the balance sheet. Balance sheet shows you assets, it shows you liabilities as well. And then you also have the cash flow statement. Here it's called statement of cash flows. So this cash flow statement will show you operating income. It shows you investing activities. What did the company invest in? It shows you financing activities, etc. But sometimes this can be a little bit complicated and not so user-friendly for beginner investors. A much simpler way to analyze a company's financial statements would be to use Yahoo Finance, because because they show you a summarized version of these three statements of a company. But guys, keep note that this is only a summarized version, so it doesn't have a lot of detail. If you want to see into the nitty-gritties of these three financial statements, you then need to go to the company's investor relations page. Let's go to Yahoo Finance. So we just type in Yahoo Finance. There we go. Click on the link. Yahoo Finance can be used to search for any company. It can be an American company, South African company, Australian, UK, etc. So you type the company that you're looking for here on the search bar. So I'm going to type Apple and it's going to come up Apple Inc. Right here at the top. Click where it says financials. So as you can see, there's the income statement, balance sheet, as well as cash flow. The first statement that we're going to look at is the balance sheet, which shows the company's assets and liabilities. The two main things that you should look at are, number one, what is the company's cash position? And number two, do they have enough assets to cover short-term debt? So to figure out the company's cash position, you go to the balance sheet, then you click on total assets right here. So you drop down there and then click current assets, so drop down over here. Then look at where it says cash and cash equivalents. So you can see here that Apple has about 48 billion cash. Next, you need to find Apple's debt. So you click here where it says total liabilities and net minorities. So you drop down on that. Then you look at where it says current liabilities and look at where it says current debt and capital lease obligation. And you'll see that the current debt is 21.1 billion. So since Apple has got 48 billion in cash and 21 billion in debt, that means that they've got enough cash to cover their debt for the next 12 months and still have much more money left over. Next, click on where it says total non-current liabilities and you will see that under long-term debt that they have got 98.9 billion in long-term debt. Their long-term debt is not an issue because look at their total assets. Okay, so they've got more than enough assets to offset their long-term debt. So that's not an issue. Next, you calculate a company's liquidity, also known as the current ratio, which is the ability of a company's current assets to cover its short-term liabilities. A good company should have a current ratio above 1. Current ratio must be above 1. That means that for every dollar that the company owes in the short term, they have at least $1 of current assets to pay for it. So in the case of Apple, the current ratio is calculated by saying current assets divided by current liabilities. And Apple's current assets 134 billion and the current liabilities are 125 billion. If we divide these two numbers, you get a current ratio of 1.07, which is a good sign. Next, we look at the income statement. This is the document that tells you how much that company made in total revenue as well as the profit. In the quarter ending in June 2022, you'll see that Apple made $82.95 billion in revenue, and after all the costs, their net income or profit was $19.4 billion. This shows you that their net profit margin is around 23%. You get this by dividing the net income, which is the profit, by the revenue. Usually, healthy and stable companies like Apple have net profit margins of 20% or more. The last statement to look at is the cash flow statement. And this cash flow statement basically details how much money is coming into the company versus how much money is flowing out of the company. Free cash flow shows the overall potential of a company, and it has got three main uses. The first is to pay down debt, because the more cash flow that you generate, the more debt that you can pay off. The second is for dividends, and the third is for buying back shares. Companies do buy back shares, and basically what they do is when they buy back shares, they increase your ownership of the business. So you get to own a higher percentage of the business, as opposed to when a company issues more shares, they dilute your ownership in the business. Generally, free cash flow should be growing year over year, and in the case of Apple, that seems to be the case, and so that's good. After you've gone through the basic financials of the 3 financial statements, what you can do is look at other things like the price to earnings ratio, for example. The price to earnings ratio, or PE, is used to measure the current valuation of a company, and it is calculated by taking the current price of the share divided by the earnings per share. You can look up the PE ratio on Yahoo Finance as well. And basically what the PE ratio tells you is how much you are paying for a company's earnings. For example, if a company's PE ratio is 20, that means investors are paying $20 for every $1 of that company's earnings or profits. In general, a high PE ratio can suggest that a company is overvalued or expensive because the share price is much higher than the company's actual profits. The reason why some companies have high PE ratios is because investors expect that company's earnings to grow in the future and they are willing to pay a higher price for it now. A lower PE ratio can suggest that the company might be undervalued or cheap. But to see if the PE ratio is good or not, you need to compare that company's PE ratio against all the other companies in the same industry. Companies in the technology sector, for example, usually have a high PE ratio compared to companies in the consumer staples industry, for example. So it's important that you compare apples to apples. You might find that a stock is at a good price if the PE ratio is undervalued compared to other companies in the same industry, or it could be undervalued compared to the company itself historically. So let's say a company historically, the PE ranges from around 20 to 25, and then today the PE is 18. So relative to the past, you'd say, oh, this company is undervalued. Another important thing to ask yourself is, does the company have a competitive advantage? A competitive advantage is something that gives the company that you're investing in the best chance of succeeding in the industry that they're in. For example, Coca-Cola has a huge competitive advantage just because of their branding alone. So Coca-Cola is one of the most recognizable brands in the world. So it doesn't matter whether you're in Africa, whether you're in Asia, America, Europe, there are literally few people in the world who don't recognize the brand, which is Coca-Cola, and also loyalty as well. Even though there are other brands, what makes Coca-Cola survive and what will make it survive? It's well known, it's well loved, and so this is what you think about when you choose your companies. Finally, if you are a beginner investor, one of the best things that you can do for your own portfolio is to diversify your investments across many different stocks. The last thing you want to do is to put all your money on one stock, because if that company goes bankrupt, you lose all your money. If you diversify and pick different shares of companies that do different things, even if one business completely goes bust, at least you have 14 or 19 other stocks to keep you afloat. With all this said, let's get into my November 2022 investments. First, I'm going to start by investing in my TFSA. So these are dividends that just came through. So guys, remember with your TFSA, you are only allowed to deposit a maximum of 36,000 Rand annually per year. And the year starts from the 1st of March to 28 February the following year. So if I just click on deposits here, you'll see that I've actually maxed out my TFSA. So it says contribution limit 36,000 Rand, tax year contributions, those are my contributions. I've actually maxed out the account, remainder is 00. What this is saying is basically I can't deposit any more money into my TFSA. However, this is a question that I get a lot. The dividends that I earn, so this 589 Rand is actually a dividend that I was paid by my ETFs. So dividends don't count as deposits. Only your deposits affect your annual limit. I hope that's clear. So let me invest. What I'm going to do is I'm going to buy the F&B Global 1200. That's one of my ETFs that I invest in regularly when I do invest in my TFSA. The reason why I'm buying the F&B Global 1200 is because they are paying dividends in November. So I'm using dividends from Satrix 40, which is where this money is coming from, and I'm using that dividend to buy this ETF, which is paying dividends sometime towards the end of November. Let's buy with all of that money. I'm going to invest all of it into F&B Global 1200. What this ETF is, it is a basket or a group of 1200 shares from about 33 countries all over the world. So your money is being invested globally. Even though you're buying in rands, your money is invested in the US, in the UK, Japan, Australia, etc. Second option, place buy order. That's it. I'm done with my TFSA. Next, I'm going to invest in my EasyEquities US dollar account. Currently, I have $649.92 in my EasyEquities US dollar account. Guys, do you do this weird thing where you convert dollars to rands? I always do that. Anyway, let's look at my account overview. So today is the 1st of November. That's the day that I'm filming these investments. Currently, my portfolio is only down by negative 2.31%. Remember my last video for October's investments. I think when I was investing, I was down negative 12%. So the markets have actually gone up over the past month. However, I'm not going to be excited about that because these markets are very unpredictable. One day they're up, one day they're down. Like I said in my previous video, I try not to let my emotions take over. So I'm just going to invest as usual. So I'm going to start with my ETFs, which are those groups or baskets of shares. I'm going to start with SCHD, which is this Charles Schwab US dividend equity ETF. So I'm going to click on buy more to buy more. As I've already explained, ETFs make up most of my portfolio. So I'm going to grab SCHD for $260 US, and that'll give me about 3.5 shares. Only buy at ask and place by order. The second investment that I'm going to make is another ETF. It is VTI. VTI is the US Total Stock Market Index ETF. I'm going to buy $229 worth. Only buy at ask and place by order. My next investment is going to be Google. Google is actually down at the moment. The reason is because of inflation, because of what's going on globally. Google's revenue is down, but long term, I believe Google will do well. So I'm going to buy more since it's cheap. And since I don't want it to become too big in my portfolio, I'm not going to buy too much of Google. So let's just grab it at $10. I'll do this every month going forward. I'll just keep on adding a little bit of Google at a time. Next, I am going to buy Apple. I haven't bought Apple in quite a while and I need to add some more. Somebody actually asked me, they said, how come you don't buy Apple? I was like, well, I do have them. I just haven't added them to my portfolio in quite a while. So I always pre-make my decisions. So by the time I'm investing, I'm not second guessing myself. I just follow the script. Next one is Lowe's for $10. Only buy at ask. Next is T. Rowe Price. The price fell quite significantly this year. I'm going to buy $10 worth, place by order. Another stock which fell quite hard this year, it's Target. So Target, buy more, $20 worth of Target. Only buy at ask, place by order. Next is another company that I also neglected for some time. It's Texas Instruments. Buy more at $20 worth. Another one that I'm going to buy is Visa. So buy more Visa, and I'm going to add $30 worth, place by order. I'm now left with $30.92. I'm going to leave that here because I'm expecting dividends in the next couple of days. I'm going to let the dividends come in, and together with this money, I'm going to buy Microsoft. So Microsoft will be my last investment. And that's it for today's video. If you are a beginner investor and you would like to start investing, you can go to my online store and grab copies of my ebooks for beginner investors. I will leave the link to my store in the description below. Also, if you have any comments or questions about this video, please type them in the comment section below and I will get back to you. Please remember to like this video and to subscribe to my channel. Thanks for watching. I will see you in the next video. Bye guys.